Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we welcome back Jeb Handwerger, who's the founder and publisher of goldstocktrades.com. Welcome back to the show, Jeb.
Hey, Karam, thank you so much for being here with me today, having me back on the show. It's an exciting time. We've had a great breakout in gold and silver, and it's starting to trickle down into the mining stocks.
Let's start by talking about oil first. What is your take on the recent news regarding the developments within Saudi Arabia, and what does this mean for the oil market going forward? You mentioned in a recent article that perhaps many of the junior oil stocks could run higher on the back of this recent development. Talk to us about this.
Well, we recently had this drone attack in Saudi Arabia. There is some great concerns about the geopolitical uncertainty in the Middle East. Now, remember, the last time the gold market really broke out was 9/11, 2001, and then the start of the geopolitical tension with Iraq. That really has caused the deficits in the country to soar. Gold is really that metal that investors go to during times of crisis and war. The 9/11 situation and this war that's been continuing now for almost 20 years right now in the Middle East, that is not going away. The real concern is that the Middle East may be reaching peak oil, and there's growing tensions between major powers. That's going to be even more pressure on the global economy. And, you know, one of the things that we're noticing is that we're seeing the stock market's at record highs, but we're seeing the base metals, the copper, oil, lumber, all under major correction. So the economists and the central planners are seeing that the stock markets are very high, but the general main economy is still incredibly weak, and this oil shock, although it may just be a start of something, it's something that we have to follow for our sector.
Let's move on and talk about gold and silver. It appears as though some consolidation is taking place for the precious metals. And 6 months ago, in our previous interview, you talked about a huge base that had been building within the gold price and that it was setting up for a big move. And that, of course, has now happened over the last couple of months. So how do you view the junior miners today? A few have moved over the last couple of months, but we haven't seen huge speculation within the miners yet. Would you have expected gold price of $1,500 plus to ignite a rush into the sector?
Well, like 2016, we saw a major rush into the sector. We haven't seen this yet because of the uncertainty right now. There's a real great uncertainty with the overall market, and going into the month of October, where there have been historically stock market crashes like we saw in 2008 and 1987. So we're in that period where there's a great amount of uncertainty. It reminds me a lot of that credit crisis where we're seeing liquidity issues. We're seeing investors who have been on margin getting margin called. So that it's not like 2016 where we saw a little price movement in gold, and then all of a sudden, because the stock markets were on fire, a huge rush into the sector. That hasn't really happened yet. But as you said, we've been following the gold market for a long time. We were recognizing the space in the gold price, that it was setting up for a huge breakout at 1,400 gold. We got it. We got a major up move in gold. Now we're consolidating after a significant move, and it does take time for the capital that's in. There was a record short position in gold last year. Now there's record inflows, and there's very few generalist investors that have gotten any exposure. So at first they're going to get the bullion, the gold and the silver. Then they're going to come and the big miners. Then they're going to look at the mid tiers, and then they're going to start realizing that the growth profile of these mid tiers and these majors has been pretty poor because they've been cutting back now for almost 10 years. So they've been cutting back and dropping projects and giving them away for pretty much pennies on the dollar. So they're going to realize that they don't really have much of a great growth profile, and a lot of these big companies have been mismanaged. And then eventually the investors are going to look at where are the next 10 baggers, the next gold mine is going to be, and that's when you're going to start seeing a lot more interest in drill results and in the junior miners, which have many that have survived this bear market. Have some really great projects that have been completely ignored. So it's a very exciting time. It hasn't really yet been reflected, the inflows into the junior sector yet, but that's really good for smart investors who realize, like I realized that this gold market was going to break out. So the past, year, I've been accumulating a lot of the top junior mining companies and waiting for this breakout. And I think we're still early stages. I think that we could really have possibly another second leg higher in this gold market, similar to what we saw in the early part of the 2000s, where we saw a 2001 to 2011, 12 run. And I think this second leg could even be possibly more powerful than that. And that's when stocks could go from pennies, like we saw this year. We saw a stock Great Bear went from 50 cents to $8 on some, and we spoke about in our last interview how investors are beginning to recognize high grade discoveries. I think we mentioned that in the last interview, and it's had a significant run since then. And I have a feeling that there's some juniors out there that are hitting great results. They're just not really yet. The market hasn't really been made aware of them yet, and there's not that new money that's come in. Now, Eric Sprott has financed a whole. He really believes this gold breakout, just like myself. Smart money has been looking for this gold breakout and ready to make investments into junior miners. And we've seen that with Eric Sprott. He's the first guy. I think there's going to be others. We're just starting that. And if you see the companies that he's invested in, they've really moved because that financing concern has been a major concern for our sector. And when you get a great billionaire investor putting in millions of dollars, that really changes the whole outlook on the company, on the junior miner.
Fantastic. Okay, well, let's go through the process of how you go through and take profits off the table. You've been very successful within the junior mining space, essentially looking for unloved companies that have the potential to go up 10 to 20 times. So if you have a 10 bagger, Jeb, do you sell the whole position, or do you have a rule to sell a percentage no matter how good the stock or the potential that story still has? And has the strategies you've used for selling changed over the course of your career?
Yes. Well, it depends a lot on the market. Selling is just as hard as learning how to buy a stock. You got to learn rules and come up with rules and methods and discipline for selling. Now, if you've been following my newsletter, which is my blog that you can check back for now 10 years now, I've been online writing. So there's a track record. You can pull back all the historic archives. One of the things that we benefited from the last bull market was, one stock that I bought, at pennies that went to $14. And one of the reasons why I can still make it through this bear market is because one of my stocks was bought out by Newmont Gold Corp at the height of the bull market for $14. That was Frontier Gold. So that was one way. I didn't have to even think about it. They offer cash. So I was lucky at the top of that market to have a win. And so that I didn't have to have really a strategy, but that is the real ultimate strategy, is to get into a bull market in gold, find a really good company that's hitting and drilling, and finding success, and then riding the company until it's bought out for a huge premium. That's the ultimate, but when you get into a bear market, you kind of have to come up with a little bit more disciplined rules, because you don't always have these major mining companies willing to buy companies at premiums. You might have success stories, but it might not be it might be a big financing. That's a sign of a potential top, or a big bought deal. For something that even a year or two ago the company was struggling to do a non-brokered financing. But if you follow my blog, you'll see that I also use charts, and I also come up with technical targets from charting strategies. So it's important for investors. It's important for investors to learn the fundamentals, but to also speak to guys like me and say, hey, where are some of the technical targets, so that I can put orders in ahead of time and discipline myself. So if I have a double or triple or quintuple or 10-bagger, I don't get caught up with everyone else at the time that's buying, and I have a disciplined strategy. That strategy has helped me numerous times, because I've had stocks that have gone to pennies to $1 to $2 very quickly. And when you have your technical targets, even the last gold bull market, if you follow my newsletter, you'll see that I had technical targets that were hit by gold. And at that time, I said, hey, you got to pull money off the table. You got to protect. Did I know we're going into an 8-year bear market? No, I didn't. But did I know back then that my technical targets were hit and that I had to pull some money off the table? Yes. And that saved me and continued so I could stay in this game. And that's the goal in the junior mining business in a bear market. It's how long can you get hit? How long can you take the pain? Before you get knocked out? The main thing is to not get knocked out. If you can get back up, that's the main thing in this business, because if you can stay in it, you're going to have a time like we've seen right now where the gold market breaks out. There's a huge inflow of money. And now these stocks that were trading at 10, 15 cents are trading at $1, $2, $4, $8, $14. So that's what I'm telling people. Hang in there. Don't give up. Don't get caught up with the negativity and sell at pennies. Stay in the game.
Some great words of wisdom there. Okay, let's move on and talk about the battery metal space. Nickel has begun to climb much higher this year. So over the next year or so, which metals look the most compelling to you if we take a look at copper, lithium, and nickel? I know you've been focusing on some of the base metal stocks which have been unloved for a while. Can you share that with us?
Well, we've been following the battery metals for many, many years now on the blog. And even we've seen these great moves and these great declines. And numerous times, 2012, 2016, 17. And we have a feeling that we'll see it again in 2020, maybe by the end of this year, because the demand for lithium-ion batteries is going up everywhere. We're all using them in our computers and our cars. It's the future. And that's what, going back to the beginning of a discussion about oil, we have maybe have reached peak oil. And that's why there's so much of those geopolitical concerns in the Middle East, and that they're even going nuclear and looking into lithium-ion batteries. So this is the future. Nickel's up 80% this year. And it's one of the few metals that I've been following for, 3, 4, 5 years, because one, you need them for the lithium-ion batteries that many people don't know about it. And two, it's really controlled by the Indonesians. And as you can see, the Indonesians can shut it off, and the price rises 80%. So nickel's a very compelling metal. Palladium, which is also, you can find nickel with palladium, has hit over $1,600 an ounce and is looking to go into deficit. And so that's been another metal that's been on a great run. Now, copper, lithium, cobalt, those stocks are all down. Copper's been down with the global economy. The copper and lumber prices are both down. Lithium and cobalt have been declining for the past couple of years. But As you know, with these commodities, you could have a very quick whipsaw effect. A lot of the reason why these things have declined is because of the trade war and the global economy concerns. But that could change very quickly with copper. We know that there's a huge supply deficit concerns coming over the next 3 to 5 years. So copper could go down to 250, 225. But I think like if you've seen copper in the past, it can come rip roaring back, and it can have a very powerful V-shaped reversal. So, and the same thing with the lithium sector. So the lithium and copper, what we do is we follow the bellwethers, like we'll follow Albemarle in the lithium, we'll follow Freeport in the copper space, and we'll look for some reversals. So copper, lithium, nickel, copper, lithium, zinc, cobalt, all those stocks are really looking like they're basing and ready for a breakout. I think it could be just a few weeks away, Q4, going into the end of the decade. There's going to be a lot of new electric vehicles and models coming out. The past few months have been slow, but I think the auto companies are building up for the next 2020 models and the end of the year, and could be strong. And most of these stocks right now, and especially cobalt, lithium, cobalt prices are beginning to move up. And we saw Glencore shutting down production in the DRC in the Congo, and looking to maybe do more stuff in North America and Canada. So check out Glencore and what they're doing, who's the largest cobalt producer. So there's a lot of signs that the base metals and the battery metals, which have been in love for so long, really might be a great opportunity for a reversal.
I think it'd be interesting to talk about a couple of books that have been very useful in the course of your career so far, Jeb. So are there any recommendations for our listeners that they should be aware of?
One book that really has influenced me, if you want to learn about the gold sector, is Pierre Lassonde wrote a gold book in the 80s for Franco-Nevada. Very good book on lesson on how to invest and understand gold analysis. That really influenced me, Pierre Lassonde. Seymour Schulich, he was one of the founders of Franco-Nevada. He has a great book that he wrote maybe 10, 15 years ago. Was one of the founders of Franco-Nevada, which probably is the most successful gold mining company, or one of the most successful gold mining companies ever in history. And, really teaches how to run companies, how to run them ethically, how to build shareholder value, how to invest in companies. Those are the two. If you really want to learn about the gold business, find the guys that built Franco-Nevada and some of the people that were around them in the early days. I've been following them for many years and continue to follow comments by guys like Pierre Lassonde, who said that gold could go to $25,000 an ounce. And I hope to see Seymour come back into the gold sector in a major way.
Very good. Okay, as we begin to wrap up, Jeb, is there anything else you would like to discuss with us today? I know before the interview we were talking about the importance of keeping a balance with trading and with real life. So it'd be interesting to talk about that perhaps.
Yeah, well, one of the things that you learn, and for new investors coming into the sector and for experienced investors, is that when you go through a bear market and you go through bull cycles, you got to really maintain balance as a trader, because when you're imbalanced, that's when you make rash decisions or stupid decisions or decisions that you may regret out of fear, out of panic. I see it all the time in this business. People capitulate out of panic. And then when times are super good, they get caught up with the euphoria and the partying, and they never take any money off the table or have any discipline. So, I've recently discussed with you and with others the importance of maintaining balance and finding outlets and taking care of your health. That's the most important thing in becoming a trader and a successful trader, is making sure you have your your outlets and your mental health and taking care of your balance. So one of the ways that I do it is through exercise, nutrition, and being outdoors and fishing, and most specifically with fishing. So follow me on Twitter. You'll see a lot of what I'm doing here in Miami. And if you're located in South Florida, let's connect for some good times and for some events here that are around mining and natural resources.
Thank you very much again for your time today, Jeb. It's always great having you back on the show.
Thank you, Karim. It's great being here. You do amazing work with some of the best guests in our industry, and I think it's really becoming a source of some really valuable information and great educational interviews.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?